Hello trade pros and welcome to a new video for this weekend. My name is Mark from Trade Pro Academy, and in this video we're going to be talking on the one hack that changed my trading forever. Now before we get into the actual video, if this is your first time on the channel, welcome. If you're a returning viewer, welcome back. If you haven't had a chance to yet, please make sure to subscribe and check off that notification bell to get notified anytime we go live or anytime we drop any new videos such as this one. In addition to that, please make sure to smash that like button. That really helps us out with the YouTube algorithm and shows us that you guys are enjoying the content we're putting together for you. I'm going to give you guys a moment now to subscribe and smash the like button, and we'll see you in the next slide. All right, trade pros, so now that you've gone ahead and subscribed, let's get into this simple hack that changed my trading forever. So what can it be? What can this hack be? Well, for me, it was a matter of not trading my profit and loss. All right. And not trading your P&L is something that we see thrown around in this industry quite often by traders. However, not very many traders understand what this actually means. And so let's go ahead and get started with that. What is P&L stand for? What does that mean? Well, P&L simply stands for your profit and loss. And what a lot of brokerages offer is on their trading platform, they do have a display where you will see your realized and your unrealized profit and loss on the day. And what this does is it can greatly affect your trading psychology, your mindset, and how you are able to execute on your trading strategy and on your risk management strategy in real time. All right, guys. And so that is one of the reasons why this was such a big change for me, why it changed my trading around, was because I was focusing on the profit and loss of on the session. All right, I was focusing on the profit and loss on the session. I was letting certain losers get to me. I was trying to take larger winners as a result of taking those smaller losses and just overall trading emotionally. All right, and so once I stopped focusing on trading the profit and loss and started focusing on the process in and of itself, that's when the trading performance started to turn around. All right, so what does it mean to trade your P&L? Well, to trade your P&L basically means that you're making trading decisions based on the unrealized balance of your trades instead of the context of the chart and what price action is currently showing. And the issue with trading your P&L statement is that it goes deeper, and there's a number of things that we can do to overcome it. But first, we've got to take a moment to think about the process of trade planning and the actual execution of it. Before you take a trade, you're going to, check economic reports. You're going to find and you're drawing your zones. You're going to identify potential stop areas, your entries, your targets, etc. And then you're going to take the trade. None of those things are focused on the profit. So why, when you get into a trade, do you automatically focus on the profit? You focus on that profit and loss column, and as soon as you get triggered into the trade, that is the first thing that you keep an eye on. You see the colors blinking from red to green, back and forth, and you stop really focusing on the actual setup in and of itself, and you get emotional. Watching the ticker go back and forth, green, then red, then green, then red, that can really work and drive on your emotions. And so stopping the focus on the P&L is what is going to help you. First, it's going to reduce the stress and any anxiety you might have from the market. And two, it's going to give you a sense of calm, and it's going to let your edge play out. All right, trade pros, and some of the ways that we see a P&L trading mindset start to manifest is in some of these kinds of scenarios. So have you ever heard, I just want to get out for break even? Not necessarily even heard it, but have you ever said that yourself? Let's say that you get into a position, it starts to move against you. Let's say the stock starts to trade within a tick or two of your stop loss, and then it gives you a bit of a bounce. guess what's happening in your mind? You might start thinking, maybe I should move my stop, give it a little bit of room to breathe. Maybe I should cancel my stop, or maybe I should do a cardinal sin and add to a loser. Maybe I should martingale. And maybe, if I do that, then the stock will come back. It'll just come back to break even. That's all I want to see. I just want to see it get back to break even so I can get out of the trade without a loss. Guess what that is manifesting? It is manifesting a P&L trading mindset. What happens when you stop focusing on the objectivity in the markets, when you stop focusing on price action, and when you stop focusing on context? It's emotional. You get emotional in those trades and you start making those decisions based on emotions, not on objectivity, not on your trade plan. And as a result, that can really lead to a domino effect that's really quite self-destructive. So in order to nip that in the butt, we'll give you some solutions towards the end of this video. Another quote that you might have heard or that you might have said yourself in trading: I have to make my loss back as quickly as possible. This is an ugly one, and it really has a potential to blow up your account if not managed correctly. So have you ever been in this scenario where after taking a streak of losses, you scale up your position size and you just look for a smaller price movement, a smaller price fluctuation in order to get yourself back to the green, in order to recoup those losses and get yourself back to the green? All right, how many times have you seen this where people are in losing trades, or they've taken several losses, on one contract, several losses on one contract, and then they scale into 4 or 5 or 6 contracts, 4 or 5 times greater than what their position size really should be based on their account, in order to try to make a couple of ticks to make back those strings of losses. This is a really, really, really destructive pattern, and you want to stay away from this as much as possible. And what is the real fix for something like this? Well, the fix is actually quite simple. It's only risking 1 to 2% of your actual account until you're making the profits, at which point your account should be growing and you can scale up your position size as a result of that market money, the house money that you've accumulated by being stringent with your risk management. If you are sizing positions to 10, 20% of your account size for any single position, these are the types of traders that we tend to see fall into this habit here, where they start to take trades on 10 to 20% of their capital. They lose once or lose twice, and guess what? They're down 50%. All it takes now is just to go full in on one trade and we're back, right? Not right. That's not how you want to do it. And if you are using position sizing correctly, if you're taking 1 or 2% losses, a streak of 5 to 10 losses in a row should only put you into drawdown anywhere between 10 to 15% of your account, which you can survive and you can come back from. However, if you're down 50%, you got to make 100% just to get back to break even. So you're really putting the odds in the other corner, not on your side, and you don't want to do that. All right, guys? All right, so that's been 2 examples of how the P&L trading mindset can start to manifest. We've got another 2 here, which should be relevant to your experiences and your journey as traders. Number 3, have you guys ever said this? I only need one big winner to get myself back to green. So this one kind of leans on the previous point, whereas instead of scaling up too much on your position size, now because you've taken a streak of losses throughout the session, you're focused on that P&L statement with those big red numbers showing you that you're down on the day, you've lost money on the day, and what that does is it puts you into a state where you are required to make that money back. And so have you ever been in a situation where you've taken a streak of several losses and then you catch that one good trade? You catch that one good trade, and instead of following your plans and getting paid where your trade plan tells you should be getting paid, you cancel the take profit and you stretch out that take profit to try to capture a larger chunk of the move in order to recoup those losses that you made earlier. All right, guys. And so this one is different in the sense that you're not putting in a larger position size here. You're in a good trade. You've managed risk accordingly. You're in at 1%, but now you're extending your take profits because you want to make back those losses. You're not taking that trade on the trade itself. You're not taking that trade based on the setup in itself. You're not letting it work out how it should be because you're focused on your P&L and you want to get back to the green. So what do? You extend that take profit out, and guess what happens? The market might not get up there. You might have gotten paid at the take profit that you had originally set as per your trading plan where you should have got paid, and then the market rolls over. All right, so you can be in a situation where if you followed your original plan, you would have taken profit, whereas you didn't follow your plan, you got a bit greedy, you wanted to recoup those losses, you extended the take profit, and guess what? The market didn't reach that extended objective, and now it's rolled over. You're back to break even or even back in a loss, and you've just added to that negative tally for your day, which again could start another series of self-sabotage and lead to more devastating results. So again, you do not want to focus on the P&L, focus on the process. Finally, this fourth one here, this one is really common for newer traders, and it's not wanting to give back unrealized profits. So if you've been in the situation where you've qualified a trade, you get filled on that trade, and it starts moving into profit right away, if you have taken a couple of losses prior to that, you might have a tendency to want to take off risk right away. You want to take that profit right away before it hits your full potential because your experience from your previous trades was that you took a loss. So you're worried and you're fearful that that trade is going to turn into a loss, and so you cut the potential profits that you can make because you're afraid of losing that unrealized profit. Further to that point, a lot of traders will move their stops up to break even because they do not want to suffer a rotation against them or a retracement, which could lead to a natural profit. All right, it's very natural for the markets to ebb and flow. They don't move in a straight line, and quite oftentimes, if you get in at a good level, it will retrace back to your point of entry before continuing on with the trend. And I can't tell you how many times I've seen it in my own trading and in the trading journals of our members where they get in at a great level, the market moves in profit right away, and then they move their stop to break even. They get taken out on that retracement at break even, and then the market rips in their direction. This is a big one and can really lead to some serious self-sabotage. So it's got to be controlled, and we've got a great video on that. Make sure to check out the information card. That title should be appearing just at the top of the screen now. You can check that out before finishing up with this video. All right, guys. So those are some of the scenarios where having a P&L trading mindset, focusing on the P&L as opposed to the actual process, can and will negatively affect your trading results. So what's the fix? Well, number one, just as easily as you can have your P&L visible on your dashboard, you can hide it. And this is a quick and simple fix. This is a band-aid solution, but it can be one of the biggest fixes that you make towards profitable trading. The reason that is because if you get into a trade and you're watching the actual ticks, you're watching it flicker from red to green, profit and loss, that can really affect your trade management. And that's really where a lot of traders go wrong, is not necessarily in the entries, but more so in the trade management. When they start focusing on the P&L instead of the process, instead of their actual strategy, they get emotional. And when you get emotional, it's not a time to be in the markets. It's time to step away. All right, guys. So number one, remove that P&L column from your trading dashboard and really focus on the process. Number two, I've been saying it this whole video, is to focus on the process and not the results. You want to try to become the best trader that you can be by focusing on executing on your trading plan as flawlessly as possible. All right. You cannot control profits. That's not something that you're in control of. But what you can control is your risk, how much you risk on each trade and how you manage that risk. All right. And so remember, guys, your profits are a result of how you manage that risk. So if you switch your focus from making money on each trade, from trying to profit on each trade, to trying to execute your process as flawlessly as possible and trying to manage that risk as well as possible, you will start to see your performance improve. All right, guys. And number 3 here, this is the final tip to how you guys can stop focusing on P&L and start focusing on the process, is to start by building confidence and mastering one single trading strategy. Now, I know this is going to sound like something that's too simple. A lot of people need to have, several strategies to be good in the market. But when you start off, all you need is one strategy. You got to master one strategy, master one setup, back test it, forward test it, do your diligence, build up a set of data that shows you, that gives you empirical evidence that you have an actual edge in those markets, so that when it comes time to executing on that plan, on that strategy, you're not second guessing yourself and you're not getting emotional when you start to see the market moving against you. All right. So those are the 3 tips. I hope you guys enjoyed that one. It's a very simple tip, a very simple hack, but it can have huge results for your trading performance. So that's going to be it for today's video, guys. I hope that you enjoyed it. Again, if you haven't had a chance yet, please make sure to smash that like button, to hit that subscribe bell, and check off the notification as well to make sure you get notified when we go live or when we drop any new videos. Until next time, guys, good luck and good trading. Take care.